The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies.
Hey, welcome to Tokenization Talks, powered by Arca Labs. I'm Annelise Osborne. Arca Labs is focused on innovating responsibly, and we are excited to bring you institutional thought leaders in the digital asset space. Our guest today is Georges Archibald, who is Chief Innovation Officer and Head of Americas for Apex Fund Services. Thank you so much for joining us. Really appreciate it.
Great. Well, great to be here. And I think I'll just say we have $3 trillion in assets. We're across 85 locations, and we're in 42 countries today with approaching 11,000 employees. So we've grown quite a bit, really over the last 5 years. And importantly, we've done that by being on the front foot with technology, with innovation, and certainly thinking with clients on planning around where the market is going to be in 3, 5, 7 years. And part of our journey really with clients is to invest really on their behalf and with the goal of positioning them for growth into the future. So that's a bit about how we've really grown our platform to that $3 trillion mark, which is significant, and really have done that with a global mandate. So we want to service clients locally in their local markets, but we want to think of really what the global opportunity set looks like, and then underpinning that, what the technology and utility framework needs to be for that to happen. So we're very much focused on that. Another update, I think, for everybody on this podcast is that recently we closed on a transaction with San Group PLC, which is a large global fund administrator. And what was nice about that is that we did pick up a lot of human capital resources that were particularly strong across technology. And those individuals are now part of our team, leading our teams. And that ability to really leverage people is at the core of this. So we always think about technology, but really it's the people and it's the thought leaders, and it's bringing those forums together that makes us really differentiated. So I'll stop there.
Great. No, it's super exciting to hear how you've grown, especially. So you have the new title of Chief Innovation Officer, and you talked about where you think the markets will be in 5 and 7 years. So what are you thinking? Where do you think the markets will be?
Well, I think just from a growth perspective, I think we're seeing democratization generally happening. So I think just as a theme, we're a very ESG forward firm, so environmental, social, and governance. We always think about diversity, equity, and inclusion, ESG, and really stewardship. So we want to be industry stewards, and in order to do that appropriately, we wanted to have the leading private markets ESG offering. And we achieved that. And importantly, what that offering does is allows managers to really analyze investments in terms of their ESG sensitivities and whether or not underlying investments meet or have potential for meeting ESG goals and targets set by both sponsors, but then importantly, their underlying stakeholders. So for us, really, we see the market in 5 to 7 years. We want to position ourselves to be the sustainability partners so that clients can grow. So we're always thinking about how do clients grow, how do they change and adapt their businesses to the environment, and ESG for us was really a cornerstone of that. And again, if you think of technology next, right? Well, how does technology empower ESG? Well, you can use blockchain to actually, capture data, and you can actually then report on that data inside blockchain. and really develop a footprint that leverages technology, importantly, to allow for sustainability. So for us, it's really about creating the path to sustainability and making that path really the most efficient and transparent. So if we do that, then we can help democratize funds. We can help ensure that sponsors are deploying capital responsibly, and we can create the right ecosystem. So I'm happy to kind of go anywhere you like off the back of that. But
Sure.
for us, I think that the tenet is really creating sustainable businesses, and sustainable businesses are transparent. They produce information that could be disseminated to stakeholders, and importantly, because that information transparency increases, you can further democratize a particular asset or process because it no longer has information that is not discoverable to underlying users. So for us, that is an important part of the journey, right? Discoverability.
Great. So you touched on kind of blockchain. Could we dive into digital assets? I know that you're doing a lot in the blockchain space. Can you share how you're using digital assets slash blockchain and how you're approaching that within Apex?
Yeah, sure. So I think a few things are really important. First we touched on people. So it's having the people that are focused in the digital asset area, and importantly in the blockchain area. So we have invested in a firm called Apex FAC, that is a blockchain-enabled firm, and is developing technologies existing in future state around the blockchain. So that's really important. So people is number one, right? If we touched on it before, if you don't have the people, then you don't really have the ability to drive an agenda forward with the required vision, number one, and number two, expertise. So we're doing work inside Apex FAC, but then also more broadly inside the Apex infrastructure with various individuals that have significant experience developing digital technologies across really industry, and that would be definitely the software side, but then it would also be financial services and technology companies. So we've really kind of covered the people side importantly to deliver value. So that's number one. Number two, just from an asset perspective, we have looked at partnerships, and we have developed a partnership with a third-party firm that looks at valuation as a service and capturing really indicia across blockchain, so that assets can be validated, credentialized, etc., on blockchain, and leverage things like IoT, Internet of Things. So we could actually streamline the capture of data. We could put the data on blockchain, and then ultimately, obviously, report around those particular assets. But importantly, we can transform the way assets are then considered, because we can now consider an asset not as a single asset, but we can consider an asset across different attributes. And ultimately, if you think of it like a real estate asset, as a for instance, if you can capture attributes of that asset, then you can actually trade and create liquidity around attributes of the asset. So blockchain becomes very important because it can then capture information and validate and credentialize that information across different slices of an asset. So technology and blockchain is really, really important because it actually transforms the way we can capture information, and the way we can make that capture repeatable, and importantly then commute trust to that particular process. So we're seeing quite a bit of that, and we're focused there. And then
Can I ask you a little part on that? I know you've gone through 1 and 2, and you probably have a 3, but for your 2, for your valuation as a service, so you have clients, just to break it down. So your clients come and you're administrating their funds, and so then you say, I can actually will tokenize that fund and will attach with it a valuation as a service, so you're able to value the investment for that fund. Is that how you're using it?
So it's a great question. So what happens is the actual valuation agent doesn't change. So a fund or particular sponsor, they'll have a valuation agent, they'll have a valuation methodology. What changes really is the capture of that information. So it's actually taking the capture portion and putting that information onto blockchain, and then because that information is on blockchain, that information is captured in a different way than it was before. It used to be captured in a manual way, right? Where
Mhm.
you'd have a particular individual that's capturing that information. Now you have it on chain and it becomes touch button in terms of being able to actually look at the underlying asset and look at the marks on a regular basis. So it does change, the capture, the frequency, the transparency. So what we're really doing is actually not changing the stakeholders who are part of the valuation process. We're actually transforming the way valuations are captured and making it kind of more tech enabled through blockchain. So that changes the ability or the view to see through an asset, and in that change, you create value. So that's really what we're seeing transform at a very base level in the industry. So if you actually transform the asset, then depending on jurisdiction, regulation, etc., you can actually tokenize a fund because um, those underlying assets have become transparent and therefore lend themselves to tokenization. So, um, you know, the cornerstone really, if we think of this, is that blockchain technology that makes its way through really a buying ecosystem, and that's the important part, right? Is that you're deploying technology across the buying ecosystem, and if you can do that, whereby you commute trust to a process, then you can create liquidity, either in the form of a tokenized fund. That could be an analog fund that's tokenized, or it could be sorry, I'm using analog and TradFi interchangeably. But if you have an analog or traditional finance fund, you can actually tokenize that fund depending on the jurisdiction using the technology. But if you take it to its logical conclusion, which is the third point, you can think of the entire ecosystem, and you can think of subscribing into a fund through TA on blockchain, so through transfer agency on blockchain. You can think of the assets being assets that are on blockchain, and then you can think of the fund that's tokenized and traded on blockchain. So to its logical conclusion, you're actually point number three is thinking through the whole ecosystem and facilitating trading in that regard. So I think the real question mark for everyone is from a regulatory perspective, which jurisdictions will adopt really that tokenized fund structure and allowing for funds to be traded in a native digital state versus a mirror state, which is basically a digital representation of an analog fund, which is something a little different. So I
Sure.
think in terms of adoption, that to us is the next phase of evolution as regulators become more familiar with blockchain. There will be, I think, further adoption and transformation. And importantly, I think what this really does, and I think which is not yet well kind of understood, broadly speaking, is that you have a system now that allows for more transparency and therefore more ultimately access and democratization, which to me is very important because that really kind of falls into diversity, equity, and inclusion, environmental, social, and governance, and really thematically um, providing really that transparency and ultimate protection to investors. Because basically, if the underlying asset becomes something that's more transparent, then valuation becomes more efficient, and we can actually then have a system that more effectively commutes trust in terms of underlying assets and value.
So the value nav calculation, right? If you have more access, if you have the access for making the values digital, so you can access them more. So would I, if I'm running the fund, I'd be able to see the net asset value from all of that data. Would that be published externally, such that it's an ongoing nav calculation?
So it's a great question. It would be published consistent with your documents, right? So you'd have whatever disclosure you'd have, right? And that disclosure would become something that all investors of a certain class could be treated equally around, right? But if you had a better process around that, then what the impact is as a sponsor, you may be able to raise capital more easily because your investors will have much more confidence that what you're showing them, which is maybe completely illiquid and not transparent, and opaque, right? In prior technology iterations, now became kind of fully transparent, and you could actually show and demonstrably prove that you're capturing information at the asset level using a particular capture mechanism that was more robust, and then you could prove discovery over time around that. So I think it actually allows you to interface with your investors in a materially different way, and if it allows you to invest to interact with your investors in a materially different way, it potentially allows you to raise capital more efficiently. So for us, right, it's part of an entire kind of process of thinking. It's not something that you kind of leave in kind of one particular um, uh, kind of ring fenced box because um, it does have knock on impact, that allows you to interact differently because of that trust and because of that access, and that inures to the benefit of your stakeholders, be it regulators, investors, um, or other, right, internal stakeholders. So for us, it's a big deal.
Sure. So do you have clients that are actually using that now?
We do. We have clients that are looking at that now. We have some clients that have proof of concepts going. We have some clients that are um, uh, seeing that it can transform their business, and picking it up. So that valuation as a service business is one of the fastest growing, and I think not a day goes by where we don't have a conversation with a significant asset manager that's looking at this in their private markets space in terms of how do I transform my business, how do I make it more efficient, how do I interact differently, and it could be that there is no jurisdictional ability to actually trade a native digital fund. However, blockchain technology can be used really in pieces and in steps, and this is one of those where you could actually use valuation as a service, and it could actually impact the way you do your business, yet you're not trading your fund digitally. So it's not an all or nothing. I think the punchline for everyone, I'll maybe end on this piece, right? Technology is not an all or nothing paradigm. It's a paradigm where you can derive significant value, but you have to kind of engage in the conversations to get there. So we've been very much on the front foot in terms of engaging in those discussions, and certainly welcome further engagement with our stakeholders, really across the market. And the final point is there are a lot of smart people out there, and it's just great to be able to have those dialogues, I think, with our clients, and seeing how much investment is going into really the technology and, importantly, driving scale through sustainability. And we're seeing that globally, which is super exciting.
Sure. No, can I ask you another question on transferability? You had mentioned that kind of as the third pillar. So, are you obviously private assets? The idea of being able to trade out is something that blockchain allows. Are you having these conversations with your clients as well? And what are you getting as market appetite?
So I think transferability is something that's probably, when we think about it, it's taken on different guises in different times, right? You can think of it as secondaries trading, right?
Mhm.
And what's important about transferability is, again, not that transferability exists. We know transferability exists. we can think of timing, right? So we can think of, well, in order to actually effectuate a transfer, can you do it more quickly across blockchain? The answer is yes, right? So you shorten that time horizon. But importantly, when you're creating value because you're actually increasing transparency and you're commuting trust. So again, it's not transferability per se. It's the underlying process that allows for the better kind of valuation process. And if you can allow for a better valuation process, then you I don't think you change the intellectual structure around transferability. Transferability is you transferring something to me, right? And that will always exist. Well, you can change the speed, right? You can change the frequency, right? You can change the adoption, right? So if your transferability adoption rate is 1 in 1,000, maybe you can change that to you know 100 in 1,000, 10%, or you can change it to much higher than that, right? So that's what we're playing with, right? We're not playing with transferability as a concept, right? That concept has existed time immemorial. You're actually, through blockchain, making that process faster, more efficient, et cetera. So we're definitely seeing that. So you're
I think as
seeing
well, to what you, sorry to interrupt, what you're talking
no,
about also, when you mentioned democratization at the beginning, I think that's as well, that we're finding opportunities to bring more people together so the marketplace would run more efficiently as well from a pricing perspective, I would hope.
yeah, of course, right? Yeah, I mean that's exactly because you're creating price discovery, right? And to us that's obviously super important and falls into our mission statement as a firm.
So this has been great. Really appreciate your time. I will also want to say you as a fund admin are looking at digital funds, right? You will
Correct.
admin crypto
Correct.
funds.
Correct. So digital asset funds definitely something we've done for a long time. We have a digital asset business license in Bermuda. We're a longstanding fund administrator. We have a head of digital asset / crypto funds inside the business. We have significant governance and resource around that. So yes, besides the really cool stuff around blockchain, we do the blocking and tackling as well. So that certainly should not get lost in the equation. So thank you for the discussion. I think it's been great. Hopefully I'll get invited back.
No, absolutely. And also I want to say people talk about disruption, about blockchain coming in to technically disrupt and get rid of counterparties, but it seems that you're taking that a step further. So it's not, you're adding services as a TA. It sounds like there's a lot more that can be done as opposed to, the business becoming null and void. You're adding a lot of services. So it's super exciting to see what you're doing. I love the next step and next iterations, of institutional finance as we look at them. So thank you very much.
And it's super exciting to be on with you. I always enjoy our discussions. So thank you for inviting me.
I usually have a really good laugh. I'm trying to keep it low key today. So thanks, George. Appreciate it. Talk to you soon.
Thanks, Annelise. Bye.